start this webinar by saying, first and foremost, our hearts and prayers, and I'm sure I speak on behalf of Ira when I say that our hearts and prayers go out to everybody who's been impacted. We continue to pray for, we continue to, beseech God in all ways possible to help everybody and anyone who's been impacted, which is pretty much everybody in the world. And we truly believe and we hope that we're going to see a speedy and swift end to this and a recovery. And certainly our hearts and prayers are going out to everybody, and that's the most important thing. And with that said, I also wanted to thank everybody for taking the time out. I'm sure, as I am, you are all getting bombarded by posts and emails and people who are trying to communicate what they're doing. And we, for one, appreciate that you've joined us and the fact that you're trying to get some insights. And as I was talking to Ira for a couple of days, we were all trying to comprehend either what we're going to be talking about and what's important. And we both agree that we're living in truly, unprecedented and unbelievable times. And to come with a script and to come with, an agenda is going to be, poorly serving everybody. And not to say that we're literally going to wing it, but we really think that we're going to try to be as genuine as we can to try to communicate to all of you what we're seeing, what we believe, and the state of the market. And with that, I wanted to introduce Ira Zlotowitz, who is truly not just a commercial broker and lender who's involved in the real estate world and the commercial lending world. He is somebody who is constantly innovating. He is pioneering. He is extremely, I would say, well-versed and multifaceted in what he does. And because of that, I was anxiously trying to get Ira on with us to try to connect and hear his perspective on what's going on. And with that, I would love to just introduce Ira and thank you for joining and just start with some open words about yourself and how you're doing, first and foremost.
Okay, thank you very much for having me. I don't know if the word is really we're going to wing it together. I think it's just that normally we like to have these types of meetings or conversations or hosting events where you could give definitive information, where real updates that at least someone could hold on to for more than an hour or two. And it's more like a fluid situation. So I want to start by sharing the same sentiments that those people that are unfortunately getting sick or are sick, they should have a speedy recovery. And this whole thing should, as quickly as it just popped in, the whole thing should leave and we should go back to whatever the new normal is. Like I had a client of mine that this time will go down. They're going to change BC AC to before Corona, after Corona. So when everyone's going to talk about what's going on, they're going to rephrase it. Was that BC or AC? That type of thing. So I think that, when we were talking, is there ever a good time to have these calls? I just felt like if we waited into the beginning of February, at least we'll have some, it's the new quarter, we'll see the new world a little bit. A lot of people projecting what's going to happen April. I think April came. The stimulus is, has started to come through, and, everyone's, including ourselves, trying to still figure they change it literally. Every hour, things are changing the stimulus, but this is what we're trying to figure this all out together. So, my background is I do commercial real estate finance. We coin ourselves as a trusted advisor. We only focus, when somebody asks me, what is it you finance? I do everything but 1 to 4 family homes. So that's the business we're in. And the only real insights potentially I could give is because I spend a lot of my time asking questions, and I built relationships with many of the higher echelons of the banks and some of the largest real estate owners. So to stay on a pulse, to see different aspects of the business, how people are thinking, and realizing that it's not just, your finance, it's what goes behind it. And what other things could, even though certain parts of real estate could be good now, but what dominoes can affect that good or bad and indifferent. So just things I could shed light on and help here. And I guess we'll start with the questions that you'll ask. And I think if some people in the audience have questions, we'll move from there as well.
Awesome. Great intro, and I appreciate that. I would say that what I'm going to try to, that's why it's a real privilege to have you here, because what you're saying is that You don't focus on the 1 to 4 family residential stuff, which is our primary business. And I think it's a good complement to get different perspectives and not to compare and contrast what we're seeing that equates to what's going on in the commercial world. But I think that there's going to be a breadth of information that we can relate to people. And I'll start by just trying to talk about what's going on in the residential world, where what we've been seeing over the last 2-3 weeks is a complete unraveling of a lot of what was rebuilt after the 2008 Great Recession in the markets. So the independent mortgage banking world really grew, and they were able to rebuild themselves after the housing market crashed. And the market was running very smoothly, to the extent that we had a lot of products that were expanding. We saw after the Dodd-Frank regulations, we saw a halt to some creative mortgage financing. A lot of that needed to be done, and then the investors kind of pivoted and adjusted to it, and they came out with non-QM products. That means products that were outside of Dodd-Frank, that were not compliant with the true banking, and that market started to flourish. And we saw a lot of creative financing in the 1 to 4 family world. And over the last 2-3 weeks, the three things that I would say, aside from the stimulus, which is an open-ended conversation, but from a product perspective, those products kind of fizzled away, and we saw a complete halt to all of this non-conforming and non-qualified mortgage lending. Anything that was not strictly Fannie Mae, Freddie Mac, FHA, Ginnie Mae, those deals have stopped, come to a screeching halt. Different than what I saw in 2008, where there was a little bit of a leeway. And in this world, it seems to be unraveling so quickly that they just came out with these alerts, effective immediately. No more funding, no more underwriting, no more approving, no more submissions. And it just came to a screeching halt. A lot of people were caught off guard because it was a complete change. So I'd like to hear your perspective. So from a product perspective, we've seen almost all of that slow stop in the creative financing residential world. We've started to see a change in government mortgages, which is your regular FHA loans, where investors are starting to curtail and restrict some of what they're offering. And people might think, well, it's a government loan and government is 100% behind this. The problem is there's just no appetite for investors to buy these loans. The government is only insuring the FHA loans. There are investors out there that need to buy it, and they're not willing to buy because of the uncertainty in the marketplace. So that's what we're seeing. A lot of changes and adaptations. What have you been seeing in the commercial world? What is happening from a product perspective, from a banking perspective, and is anything getting done right now?
So I guess it's really a different world we live in, the commercial world. There's no slowdown. Everyone's lending, same exact financing. No, I'm joking.
Awesome.
So I'll tell you really where the core difference is, and there are changes, but I'll explain to you where the core difference is. Almost, in our world, there's something called CMBS, commercial mortgage-backed securities, which is very similar to your world. I guess MBS is by your world the same equivalent.
Yes.
That world came to a total halt. It works the exact same way as your world. It's no one's money in that world. Somebody has $100 million, and they only lend that $100 million knowing that they could sell it off on the securitization market and keep a spread of some sort. That's why they do those loans. So if they don't know what they could sell it for, or if they could take a loss in the sale, they're not going to go ahead and go do those transactions. So outside of CMBS, for the most part, no other real bank came to a screeching halt, because every other loan that we're working on is a lender that is using, so to speak, their money. So if we go into a conventional bank, if you bank at, take New Jersey, Investors Bank. So Investors Bank, most of the money they're lending on depositors' money. It's their money that they have. They just want to make sure if they're protected. So they could decide, something? I'm not comfortable at this % loan to value. I'll do it this way. I want a reserve, not a reserve. I'll do different things. So they have the ability today. Now, I'm talking about literally up until today. Forget about what I think. I'll talk about what I think is going to happen starting over the next week or two. But they all have the ability to lend. So we're still closing deals almost every single day from the existing pipeline. We're also actually tying up new deals on a daily basis. The new deal we're tying up are down drastically. We would type as a company 5 to 10 deals a day, typically. Commercial deals are a little bit larger, obviously, but now we could do 1, maybe 2 deals a day. So on the smaller loans, because when it comes to the regular banks, how the banks do lending, when they're lending, people that are lending with their own money, they could decide to still lend, but just be a little more conservative. And I'll talk about what the conservative is. When they're selling things off, they're using other people's lines, that's where the problems became. The larger transactions, the very large transactions, like an investor's bank can't lend $100 million themselves. So deals that are large and had to go to places that they would have to draw on different types of lines, which is typically a CMBS type of product ultimately, or CLOs, different things like that, that's where the problems are. So the core, at the core, whoever has money in commercial real estate is still willing to lend. The biggest fundamental difference, and this is why I think it's going to change going forward, is that commercial real estate is financial engineered. Like we just rolled out actually for the market, I have an app we just updated it so many people are at home to be able to underwrite a deal from A to Z on the go, the regular Eastern Union app. And the world changed. 20 years ago, people would buy real estate based on the bricks and mortar. What is the building worth? They talk about you in a conversation when someone called me and said, Ira, I'm buying this building. You know why? It's a great location, a great building. They'll talk about the building, the assets. Now they talk about just the cash flow, the IRR, the cash on cash. So we came into a world of financial engineering. That's the universe of the world we lived in. But basically, financial engineering is that the decision on a building is based on the cash flow. A decision on a home is based on where I want to live. So therefore, the commercial, a lender, including Fannie Mae, Freddie Mac, are able to say, no problem, we'll still lend you because there's still cash flow. There's still tenants paying. So up until now, there were tenants paying, and it was speculation if the tenants wouldn't be paying in the future. Now, what happened is everyone is concerned. We'll know more and more numbers every single day now. What are the collections? The world is going to, the commercial real estate lending world, which will trickle to everything, is going to be determined now. April and then May. What is going to happen with collections? Is it 20% collections are going to be lost? And the owners will collect 80% of their normal rent roll, or they collect 50%, or they only collect 20%. These are the big debates that are going on. So what lenders are doing now to solve, they only have to solve for that problem. They don't have to solve in their mind yet, which is debatable, to the values yet. They primarily have to deal with the cash flow. So what Fannie Mae instituted is that depending on the loan, they will hold off at closing between 6 months and 18 months, hold back the full reserves to carry that building for those 18 months. So in effect, instead of cutting the loan amount from an 80% loan and not doing the loan at all, they'll say, we'll still give you the 80%, but we're going to hold back potentially on the size of the deal from 12. The most common is 12 or 18 months. Let's go with 18 months. We're going to hold back 18 months worth of principal, interest, taxes, insurance, reserves. Keep it in account. And as long, if you get your rents back up, I'll release it to you. So really, they're going to fund you 80%, hold back, it could be the equivalent of almost 10%. So they're really protecting the cash flow. Because what everyone is believing is that within 3, 6, 9, 12 months, cash flow will be back to normal. And if that's the case, life could go on. So they have a way to hedge it. The issue on your side is only purely a financing issue. The person willing to take the risk from your paper, what kind of risk are they willing to take from your paper? So that's what we're finding a little bit different. So lenders are able to lend today. Fannie Mae is lending today. They're lending if the cash flow is there. So for example, retail, which the belief of retail is like almost to nothing now. Freddie Mac and Fannie Mae said, Freddie Mac for sure said, if there is a retail deal that if there's a building has a mixed-use property, has retail downstairs and apartments upstairs, in that situation, they're giving the rent for the commercial space as 0. That's the underwriting it. Then they'll give the regular loan.
So that is a very good starting point in terms of what you see going on in the marketplace. Definitely the distinction between the CMBS world and the banking world, where banks are able to portfolio loans, and the changes that you see taking place in how they're going to evaluate deals. So I think there is, and also just from the owners, just the perspective of what they should see and what they should anticipate with their own banks. We actually, I would say the same thing. Yesterday we did a webinar, and I've been spending a lot of time with industry leaders who are talking about this and trying to get the word out. We actually think that the next critical part of the mortgage banking residential world is also in the servicing and how loans are starting to get paid or repaid, especially because of the new mortgage forbearance provisions that the CARE Act permitted, which is allowing people to go and put their mortgage, residential mortgage, any loan that's backed by a government loan, to try to forbear those mortgages. And part of the problem is, if it's a government loan, the servicer needs to forward that money to their investor. So if all of these people stop today, the unemployment numbers came out, just as an aside, $6.6 million, 6.6 million people unemployed.
What, new unemployment this week?
Unemployment for this week, 6.6 million, which is pretty much double of what happened last week.
So there's 9 million unemployed in total.
9 million unemployed in total. And it's still, in our opinion, it's still underestimating the true number, because states like New York and California are still showing significantly lower unemployment numbers. So that's not truly reported yet. And you have all these companies that are going out that are starting to furlough their people and talking about it. I'm speaking to people on the street who are telling me that they've been told they're basically in status quo right now. And if things don't change around immediately, they will probably be let go and put on unemployment. So those numbers are changing. Yep.
I happen to think, by the way, I know someone mentioned the comment here. I happen to think that, people saying that you can't even apply, it's too slow. So I think on one end of it, they're scared to have the full number come out, because, there are many people believe the true unemployment number right now is at 25 to 30%. You mentioned to it that it could be at 20. We'll hit 20 at one point. But the stimulus that they're coming out with, and as we're trying to become a leader in that space to help on the PPP stimulus to be able to get people that money fast. The logic that the government is doing this round does make a lot of sense, because they're basically going over to every business owner. They're basically telling a business owner, what is your payroll? Let me give you within 3 days. Their goal is that by next week, that every business could apply that has workers and get 2.5 months payroll wired to them. So they should really keep that staff. And if they keep them, because what's really happening now is that the belief for some reason is, and I don't know if this is right or wrong, but this is what they're hoping for. They're hoping that in the next, if they could give enough money into the economy right now and give bosses money and give workers direct this one-time check. And the hope is that that when this comes out, everyone will continue where they were from before as best as possible, and it won't be as bad as they're discussing. That's the approach that the government is taking, right or wrong. So, like if I was about to lay someone off, that wasn't the plan, but all of a sudden they tell me, oh, why lay someone off? 2.5 months, and you don't, if you actually keep them, you get them, it becomes a grant. Why would I lay anybody off? That's the plan. The question is, if they stick around for 2 more months, would the business pick back up that I'll keep them? Or if it goes 2 more months and I just delayed the inevitable for 2 months, I'm just gonna have a blip for the next 2 months. That's really what the story is. But don't forget, Trump also talks about in the stimulus to go over to the whole infrastructure of the company. That's another plan. People go back to work. They can't go back yet, but if he institutes that could be giving a ton of work to the whole entire economy, get people out to work throughout the whole country. If they put a stimulus bill to start hiring people to do construction throughout the country, infrastructure. It's going to be interesting times.
Yeah, no question about it. So where do you think, let's assume, we never want to be doom and gloom, just assuming that the unemployment numbers continue to trickle higher and the true unemployed works its way into the system, do you see that banks, aside from reserves and some loan to value considerations, what other changes might take place in trying to get deals done in the new norm?
So in my business, it's not so much about unemployment. Yours is much about unemployment, because if someone's looking for a loan, they have to get employed to get that loan. By me, the business has, the conversation in my business boils down to 2 things. It boils down to number 1, collections, and number 2 is the number of forbearances. So here's the story. I'm going to ask you all a question. You can think about it, and then I'll give the answer. So I don't want to lead the witness, so to speak. Based on the fact that the government is talking about all these forbearances, and they're telling every property owner that if you can't pay, you have the right to go to your bank, and they could take the next 3 months and either tack it to the back of your loan, or they could amortize it over the next 12 months, but you don't have to pay the next 3 months. What % of property owners do you think will actually call up their bank, Fannie Mae, Freddie Mac, the local bank, and say, I want to have this forbearance. It's not a blemish to my credit. I want to do it. Now think for 1 second what you think that answer is. So
I personally think it's a lot. I'm curious.
okay, what number would you put as a lot? Is that 10, 20, 30, 40, 50, 60, 70, 80, 90, or 100? Now, there are people who have buildings that tenants will pay. There are people who have buildings that they're very wealthy. They don't want to. They want to say they paid through the downtimes. There's all different types of people.
35% is my opinion. I just wrote an article about this in the residential world. I had several calls, literally in the past 48 hours, from people who, I'll give you one amazing situation where somebody is buying a house in New Jersey, and he cannot sell his house that he currently owns because literally they just can't even put it on the market. And I'm asking him how he's going to get to his down payment. And his answer was, well, part of my funds for closing will be coming from, I'm going to be amassing about 3 months of my mortgage payment that I'm not going to be paying to my current bank on the home that I own. So he plans on forbearing his mortgage on the property that he owns to save money to buy a house. And that's just one. And I said to him, well, have you applied for that? He said, no, I assume it's automatic. So I see in the residential world, and then I've had people who still have their job, who still are employed, who are in an industry that has not been so much impacted by what's going on. And he told me, look, if I, and this is a sophisticated borrower and somebody who I've done several refinances for, and he said, if I'm entitled to the money and it quote unquote has no impact on me from a credit perspective, from a monetary penalty perspective, why wouldn't I just snooze to defer that and deal with it later? I'll go to the bank and however they're going to restructure the loan. So in the residential world, I think it's going to be significant. I'm curious what you think and what you think the statistic will be in your world.
So I don't know about the residential world because, if it's a total free ticket, then plenty of people can take a free ticket. On the commercial world, you have certain banks saying, even though you're allowed to, but we're going to look at you negatively, maybe a black mark, who knows? The bottom line is that most banks are only predicting 20% of owners. And there's some people think it's going to be much more, 40, 50, 60, 70%. And the real question over here is if it becomes more than 20, then we have a major issue because the banks don't have enough profit and reserves put away to defer. They have to get this income. They have to run their business. The fact they're getting this money and paid out in a year or paid out at the end of the loan doesn't help them for right now. So to put this in perspective, I was talking to a bank that has a $20 billion real estate portfolio. If their average principal and interest payment is 5%, that means they're collecting $1 billion a year. If they defer, let's say 100%, that's $250 million. They're not going to collect now. They're going to collect it at a future date. Their whole profits are 200-something million. They don't have reserves or cash to carry for that. So I don't think it's going to 100, but when I speak to certain people on the street, they think it's way more than 20, but banks just think it's 20. So the banks are preparing for a number. We'll know in the next, the reality, there's not going to be drawn out for months till you figure things out. It's going to happen. You will know by May, April and May, how many people ask for it, number one. Number two, it's going to be driven by what is really collections going to be April and May. And the big debate is, do you think April's going to be worse or May's going to be worse? Because April, you could say, they still had the job till now. Even they're getting good unemployment now, they're getting that one stimulus check, the tenants, they should pay April. May, they're going to have a problem. Some people say, no, just the opposite. They didn't get the stimulus check yet. So it's going to come out at a separate time afterwards. So these are debates, but the debate right now is going to end within the next 30 to 40 days. In 40 days, we will know what the real problems are. And then based on that, what losses are going to take effect. But I want to really add one thing, and I think this is really, if I could give like one sound bite, so this way everyone can really have their own food for thought that's really going to determine, it's really to determine everything that's under the sun. I touched upon a little bit before. So if you want to like know what is, obviously it's collections and it's unemployment will affect collections and collections will affect forbearances, but it's ultimately going to boil down to some people will still have a job, potentially not pay, and some people that won't have a job and still will pay. But ultimately it's going to boil down to collections and forbearances. Here's really the question now. What is the value of commercial real estate right now? This is the billion-dollar debate right now. There are people of the following thought process. A, real estate values, commercial real estate values are exactly where they are. This whole thing is a blip for 6 to 9 months. So all you have to do is reserve for that. So if I was buying a building today and the seller, I would pay $10 million for the building, the seller would put into an escrow account the next 9 months worth of rent or 12 months worth of rent, and every month there's a shortfall, I pull it out of that reserve. The building's worth 10 million, just I'm out of a cash flow issue for 12 months. That's one way the world is thinking. That's how most lenders are looking at the world today. The other option is no. Real estate is never going to go back to the full 100% collections. So the real estate value has to drop because you used to underwrite a loan at a 5%. You used to underwrite a loan at a 5% vacancy. And at a 5% vacancy, that's how you do the cash flow. Now there's really a 7% vacancy. It can always be. It's going to always be a tougher collections. Number one. Number two, real estate's becoming riskier. It's not this simple product, can't go wrong. Look what's happening now. And if that's the case, if someone buys it, we use calling it a cap rate. The cap rate won't be a 1%, will be an increase of 1%. And therefore, the intrinsic value of real estate right now is down somewhere between 15 to 20%. That's the two debates. Is it a blip and reserve for it will fine, or is it not? If you go with the part that it's not, then if someone's an owner today, they own real estate today, the issue then becomes, I own real estate, and if my tenant's not paying, and the forbearance period ends, do I want to put money into my building? My building's is on the water potentially. So that's where the big debates become right now. So what's the real answer? I don't know. But the clarity to this answer is what everyone's watching and should be coming now between April and May. Because by May 15th.
Hello? Did we lose you, Ira? Hello? Hello? We may have lost Ira. So yesterday we had a webinar. We were doing a mortgage forbearance seminar and webinar, and we literally we must have broke the Zoom. So shout out to Sandals End. So I don't know what happened to Ira. It looks like everybody is still here. So it just to continue where he was leading us, which is basically, in his opinion, he believes that we're talking about a 30 to 60 day window where time will tell as to what the marketplace looks like. And I think that is very much evident in the reality of what's going to go on in the world, which is we're going to see in 60 days from now how the market looks. It's like a huge tsunami coming through going through the country. And when we're able to be, literally and figuratively released from our homes, we're going to go and look at the new landscape, and we're going to be able to say, well, here's what it looks like. Let's go through the rummage and rumble and see what we're dealing with. And I think that is certainly something that everybody's hoping and waiting to see what the reality of the fact is. But at the same time, I think part of what we're trying to, as we get Ira back here, there you go, Ira. Ira.
Yeah, got it. Okay.
All right, you're back.
Yeah.
Okay. So I was just recapping that you're saying that really, it's a wait and see period. But my question really is, are you back up and running?
Yeah, I'm back.
Great. So what you started to say was that there's an intro estimate of maybe 20% of non-payment. So can the system handle 20% of mortgages not getting paid?
So on our end of it, suppose it can, because every bank has reserves and every bank's prepared for it. I spoke to a small bank that says they can handle 75% non-repayment, a deferral. Mm-hmm. But the real question is on the human psyche of things. What gets me very nervous on the rent side is as follows. I remember, and I'm sure all of you remember, 2008. You had regular people, friends of yours, you held with upstanding citizens that came to you and said, hey, do I have to pay my mortgage? I heard if I don't pay my mortgage, I could work out a deal with the bank, and it's free money. And your answer then, well, it'll ruin your credit. The only answer people are saying is, it's going to ruin your credit. And some guy said, I don't really care. For this savings, I don't care. Number two, you have equity. It's possible they might foreclose on you. You might lose your house. So plenty of people didn't have equity then, or didn't believe it. They said, yeah, I'll stay here. I'll fight it. Think about if you're a renter, and a renter calls you up and says, should I pay? My landlord's not paying. How are you going to get the tenants to stop paying again? What does it take for tenants that have to move out to a different building? So by me, I look at if there's 60% collections somewhere, or 80% collections, or 90% collections even, those 10, 20, 30, or 40 that didn't pay, Like they talk about New York could be devastating. They talk about certain places might not be hit so bad. But again, if unemployment is 25%, yeah, it's not just in New York, it's all over. The question then becomes, how are we going to turn back on the spigot? That's what I mean. I'm really focused on is that it can't, my logic tells me it can't just be a blip. It can't be 20% or 30% of people are not going to pay their rent, and they're going to start paying their rent in month number 4. These landlords weren't rolling in money, and they had enough cash flow to everything was great. So you go for 3 months they're not paying because the tenants didn't pay them. How are they going to make it up for the banks that want to make it up over the next 12 months? They're going to start right away paying them, so there can be bailouts. I speak to a big client last night. He goes, Ira, I'm waiting for this. I'll be buying notes at a discount. I said, that means your buildings are also going to be worth a discount. So you do believe values are down. So right now, I think people don't even know what to think. Don't forget, everyone's working at home. Look at us, we're all working at home. It's different than we're all coming into an office and around the table talking about a debate. There's no one in that environment to debate what's really happening. So I think people are sitting at home, unfortunately, every hour a day you're hearing about another death, the toll going up. And the president comes out, like on a morbid thought, the president comes out and says that there's 5,000 deaths now. And he comes out telling there's 200, and we think that's like terrible. And then now he tells us there's going to be 200,000. They ordered 100,000 body bags. Like these are things not being put into the normal setup of the economy. That's 40 times what's going on right now. And these are just like someone goes in the hospital in the morning and they're out that same day. So you're putting all of this together. I have to believe that real estate values are coming down without any doubt on the commercial side, without any doubt. And it's just a riskier to invest. And I think that what I was telling people, I do a podcast through LinkedIn a little bit, is that you have to realize who are these investors in real estate. It's all of us on the phone here. Every one of us, when we had extra money, someone said, you want to invest in real estate? Real estate was a good investment. Because for the last few years, someone told you about investing in the stock market. Your response is, whoa, it's very high already. Are you sure it's not, it's going to correct? So the stock market got you a little nervous. And real estate has cash flows. Everyone thought, oh, even if it corrects, what do you care? The cash flow is always there. The cash flow might not be here now. So are you tomorrow morning going to take your hard-earned money and invest in real estate? And if yes, you're going to want a better return. So if everyone is going to trickle for that better return, prices have to come down. It's a financial engineered world. It's scary part is if you download the Eastern Union app, I could show you, you could play with it. No, it's not rocket science. Take you 4 minutes to figure it out. You'll see how one stupid little change on one number, an interest rate changes like this, a cap rate change like this, the values drop drastically. So what's ultimately to be the driver? The driver is going to ultimately determine, we could speculate, but if you want to know what you should focus on, don't listen to, put on blinders in front of you. Follow the collections and follow the number of forbearances. If forbearance, you read articles that by commercial real estate owners are starting to ask for forbearance above 20%, we are going to have a banking issue because the banking system is not prepared for more than 20%. It means it requires a bailout. If you hear that collections are lower than 80% or lower, that means that landlords cannot afford to run the buildings. I'm talking about if someone's a slumlord and didn't really keep money normally, I'm not talking about him. But if there was a landlord that ran his building normally with the normal buffers and everything was fine, he should be able to go to 80% collections and just make everything, so to speak, work. Below 80, we have big problems. And if that's the case, then just your own self follow through the logic. Now, I've been spending a lot of time talking to a lot of bankers and people, and they say their opinion. And I said, I'm not going to tell you my opinion compared to yours. We just have to reconcile. You can't out of one breath tell me that in New York City, will be 50, 60% collections and then think only 20% of owners are going to ask for forbearance. It's not possible. So that's just, they have to reconcile themselves. So I actually met some bankers say, no, I think tenants 80% will pay. Retail, yeah, that's a problem. But for multifamily, 80% of tenants will pay. Again, do I know the answer? Do we know the psyche of a tenant? Do we know the psyche of a tenant that's paying an $800 rent? Do we know the psyche of a tenant paying $2,000 rent or $3,000? There's also a debate. Go through this. A $4,000 tenant, some people say they're going to pay. They have the jobs, they understand they're going to pay. So I don't say, you're crazy? They're the smart ones. They're not going to pay. They know what $12,000 is. They know the landlord's not paying. They'll hold it back. Worst comes to worst, they'll make a deal with the landlord in 3 months. Both ends of the spectrum. So it's all speculation. Now already, the numbers are starting to come in. So any of you that have commercial real estate clients, your question to them should be, what were your collections for April? It's no more speculation. And they say, well, it's only the 2nd. Okay, no problem. What's your collection so far? Were you typically by the 2nd of every month? How many people ask you for discounts? That's where it's at. And ask them what the plan, what are they doing?
No, these are great points, Ira. I think you're spot on in terms of we can start to see now that April has started. Same thing in the residential world. I was saying yesterday on our webinar that one small servicer that we have a relationship with already reported 8,000 calls about how to defer, to forbear their residential payments. So that means this is one small servicer. You can imagine what's going on at the Bank of Americas and the Citibanks and the Chases of the world.
No, Chase and Citibank only have the best clients. None of them are calling.
Everybody's paying is just coming out of the checking account. Agreed.
Yeah.
Agreed. So agreed. I think we're seeing Wall Street and Main Street kind of and the reality of the street converging. And when you were offline for a minute, I was saying that I think once this tsunami is over, people will start to step out of their house literally and start looking at the landscape and seeing what's going on, the reality of the world, and then we'll be able to unravel. But to your point, we can start to see now. I spoke with a small, tiny local bank, and they started to say that they're expecting 20 to 30% of deferments, and already people are talking to them about modifications and trying to figure out how they can play the system. I think there's always going to be outliers. I don't think that that's indicative of a true marketplace. I saw somebody quote a great thing, which is the virus of 2020 is a black swan that no one saw coming and has unleashed a health crisis in the world that we have not seen in 100 years, as well as a labor crisis, economic crisis, credit crisis, liquidity crisis, and potential banking crisis. So we're really touching upon all aspects, the pillars of the world: health, the well-being of individuals, the well-being of the banking system, the well-being of the economy. And it is certainly, far be it from us to speculate and predict, but time will tell how people start to adjust, either game the system, and you can't really rely on those, but try to adapt to the system. So with that in mind, my question to you is, I know from an approved funding perspective, we've been having we used to do weekly sales meeting, which was unheard of in our residential world. We've expanded that to several times a week, to maybe even several times a day, where we're having sales meetings, marketing meetings, strategy meeting, and well-being, just checking in with one another. I'm extremely optimistic. We're trying to figure out ways to react and to adapt to the new norm, as well as the potential of what the new world may look like in 30, 60, 90 days from now. I'm curious to hear what you're saying to your people, to your lenders and your bankers out there in the street and your brokers, and what your thought process is in general to the real estate community, maybe real estate agents who are looking to sell residential or commercial real estate.
So I wanted to say, like I spoke about this the other day. I happen to think that this crisis, we'll call it, is actually going to move. We're going to have what's called a gig outsourcing revolution. This is going to be the big push where a lot more independent contractors, little businesses, like look at the Amazon world. It used to be $1 billion retail store. A few people owned it. They were a billionaire. They made $1 billion a year. And now there's 1,000 Amazon resellers that each make $1 million a year. And 1,000 little companies opened up. I happen to think that right now, the Uberization, you call it, is that I'm not worried about the American worker. I think that many of us now be forced to open up smaller businesses, do our services in a gig economy type format, bring in someone to work with us. Instead of big companies, I think companies are going to hurt. I think that individuals, the job markets is going to be stronger, not because they're going back to the same companies, but I think a lot more companies going to open up. If someone's grading graphics, instead of working for a company, they're making $100,000 a year, and they weren't really living at that number, weren't really making it, and they didn't want to take the plunge to open their own marketing company. Now they're already out. They'll open it. They'll get themselves 3 or 4 clients, and they'll bring in someone on the team. You have a lot of little companies for every type of service sector starting to open in a very, very big way. So I'm very optimistic about individual workers. I'm not so optimistic about companies. I think like a company, even including myself, I'm not going to recover from these 3 months of the shortfall to carry the staff. I'm not going to make up for that difference. And I think that many companies, the companies are going to have bigger problems in the going forward, because a lot of the good talent that felt that the companies were loyal to them, I think this really showed them that the loyalty doesn't really stay there at the same type of level. There'll be a lot more people saying, you know something, let me have my own quality of life. You also experience working from home. You'll figure out the right hybrid of working from home and not working from home and working in an office. I think this is going to change, and at all levels, companies will be willing to outsource, people will be willing to work from home, the whole thing is going to change. So I'm optimistic on that front. Where I tell the brokers in the office is that, I think, unfortunately, the thing that's bothering me personally the most is I always try to live my life, if I can, as I was brought up, is if you could, the dream is to be able to help people and make money. And I was able to be fortunate enough to be able to give people a job, teach them the business, help someone who's looking to buy his first piece of real estate, refinance. A banker wanted to get business, bring people business, become the connector, and make money in the process. What I told people it's troubling me the most is that I believe that, unfortunately, as we move into this next phase, it's going to happen because we're going to be making money really because people are taking losses. The opportunities are going to come is because someone is going to call up and say, you know something, I'm totally screwed, and just sell it for any price and just try to get me what you can get me and go. So will I be helping him that if I wasn't there, he would have sold his note for 50 cents and I got him 55 cents, but the guy just lost 45 cents on the dollar. So that's the troubling part. I don't see this just snapping back. I can't see it, but again, as a believer in God, you can just snap the fingers, everything goes back to the way it was. But logically, the real estate was ripe for a correction. Logically, certain things didn't make sense. So that's the only thing. So by telling the staff, by me, are we going to make money differently? And for the same token, right now, I rolled out the site, sba-ppp.com, for this PPP loan. I became a preferred broker for one of the lenders. That if this comes out, it's possible my staff is able to make some money during these next 7-8 weeks. So in the worst 7-8 weeks, we thought very few new deals will take place. We could potentially be processing a couple thousand of these these PPP loans. So I think it's going to be a different world when we come back. And over the last few years also, I think that we invested heavy in technology. So I think that the growth for my business would be, I'll be able to hire more independent contractors throughout the country. Again, it goes with the same point I was saying before. I'm not worried so much about the workers. I'm worried about the companies. So I tell the staff, it's going to be different. I think someone just made easy money, making millions a year, just like processing these big. I think that's going to change. But it's going to be different. So I tell the staff, it's that the next 2 to 3 months are very, 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 very tough. I see it very, very tough to really make a living in these next 2 to 3 months. That's why the stimulus is pumping it. But again, that's where the balance comes in. So if I believe in 3 months it will start again, 2 to 3 months will start, then this stimulus should really be able to carry me. The government's lending me money today. And the government's giving me grants today. And so far, thank God, we kept every one of our staff. And that I pray and hope I should be able to keep every single person on. There's 100 of us in total. I'm saying, okay, then if the whole thing is 2 months, this could be the kick going forward. So I'm telling them, I'm not just taking an optimistic approach. It has to be a realistic approach. It's going to get very bad for these 2 months. And it will be opportunities, yes. But now don't forget, because of the stimulus, the opportunities also take longer to come in. If you can't start foreclosures for 90 days, if you can't, there's going to be no purchases, probably no brand new purchases for the next 90 days. You can have there's no new real activity, no new foreclosures, no new note sales, because people don't know what the government's going to do. So it's really could be dried up transactional value, transactional business from there. And that's it. I can understand from your end of it, the lending on the lending. Someone brought up a point to me. What happens? How do they even ask somebody who's still working? How do they get verification of employment? Who says the company they're working for is still existing in certain industries? So also, would someone buy a house at what price? But I have a nephew who sells houses in New Jersey. He says he's still selling. He's still renting. I find, you're always going to find that, listen, if there's 80% of collection, that means 80% of people are paying. That people have to move. There's a certain part of the economy is always moving. So to really sum it up is that I'm telling people the next 60 days, I think it's going to be very, 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 very tough. April and May will be ridiculously tough. And thank God, I hope, like I said, if this SBA thing, we could be able to process those loans. But without that, we prepared for drop in revenue drastically. And, we had money in reserve for these few months, but it always becomes the question, is it just 2 months? So no problem. But if it turns to 6 months, then you have to have half the staff or a third of the staff for 6 months. But if the government's pumping the stimulus between to us and to the workers, this should hopefully make that carry and wake up in 60 days. I think that's really what Trump wants to do. And he slipped in his thing by saying it. When they attack him, and this is not, I'm not taking a political stance on Trump, right, wrong, or different. And this is, not the time to take the positions, but I listen, I watch every word of his speeches. And his answer a lot of times is that as the leader of the country, there's certain times he can't say everything that he knows and sees. Because if he would have came out 3 weeks ago and told you how many people are dying and you would have thought this thing's for 6 months, there would have been riots in the street, they predicted. But he tells people, oh, middle of April will be out. And then as we get more comfortable, he keeps adding different parts to it. There's some level of hope he has to give out to the country. So I think that's a little bit of the game that he has to play in the reality. And I think, but from watching every number and every feedback and reading up and talking to some very smart people in different areas, I learned how to ask questions. I learned how to learn from questions and asking the right questions to people to get to the bottom line. And it seems to be that the next 2 months will be devastating. Then the world will know what, it won't just be speculation. We'll know where everything is, and you could start rebuilding from that point and see what the opportunities are. And if you're staying true to your clients and honest with what you do, when you come back at it, are you gonna be, do I think I'm making the same money in the next 12 months? I tell my staff, no. Do I think I'll be living and having a living to be able to live? The answer is yes. And that's what, do I know what percent will be multifamily refis versus purchase, versus notes, versus equity, versus bridge, versus healthcare? All those answers I can't answer right now. But I just know that if we stay as a trusted advisor to our clients, when something is going to come up, we'll be positioned to take advantage of.
Those are amazing insights, and I couldn't. You're preaching to the choir, because what our philosophy here is, to your point of saying that, will you be making money and providing a service and helping somebody be successful? So maybe that dynamic may change, because if somebody's losing money and you're only saving them, 50 cents on the dollar instead of 40 cents on the dollar. Again, we certainly sympathize with all the people who have been impacted and will be devastated by this. I look at it, the premise and the principle of how we built our business, which is to be that value advisor on the residential and beyond world, which is, if you're saving somebody something, that's value that they would not have gotten otherwise.
Yeah,
so,
I hear, by the way, I hear you, but just like,
no. I'm not saying it doesn't hurt and sting. There's no question about it. But if our whole premise, and correct me if I'm wrong, as a broker, to be an intermediary, is to bridge the gap of bringing value to somebody that they can spend all day long. And I say it to my clients all the time. You can find some bank in Kalamazoo that may give you a penny less or basis points cheaper in something, but our job is to provide value and to bring that to you in an efficient and streamlined manner, and to make it worth your while. And I think people who are at the forefront of adapting and adjusting, which is what we've been talking about in our world, how do you adjust to the new norm, to the realities? You're asking questions about verifications of employments and companies and all that. I couldn't agree more. These are conversations that we have internally all the time, and we're pivoting and saying, well, we can't verify things this way. Here's what we need to do. At the same time, we need to protect ourselves as a company, because we want to get through this. We want to endure. So we are adjusting with common sense. We're adjusting. We had deals that are funding, and thank God, things are still working their way through the system, albeit at a different pace, because you have people that are working remotely, title companies and attorneys and everybody else. So you need to adapt to it. I think the bigger companies, and I've had some of my loan officers ask me, well, we're losing this bank ABC is offering a few basis points less in rate than we are. And I said, that's great. If they're looking to buy the market now with rates and flood their pipeline and not be able to process those loans in a timely manner, good for them. We can't compete with somebody who's trying to, undercut people. What we want to compete with is doing what we do, continue doing what we're doing efficiently, productively, and as smooth as possible to adapt to what's going on, be it closings, adjusting to the closings, adjusting to the verification, adjusting to the processing, and being as sensible to our client and give them that advice. And to your point of people adapting to just the new norm of the reality of life as bigger businesses, first of all, you always see somebody's true color in times of crisis. So you have some of these companies, and I have nobody in mind, that are immediately slashing their workforce. Look, they have to do what's good for them, because their bottom line is that they owe a fiduciary responsibility to their shareholders, and it's about making money. Smaller companies, people that are putting their clients and their own employees at the front line of the most important thing, those are the companies where, yes, people will be loyal to them. People should be loyal to them. Things will change for those middle market. I saw your podcast on the Uberization. I agree. Part of what we did when we adjusted from the 2008 crisis was, instead of laying off the people that we needed, we allowed them to work remotely. So we invented the remote work 15 years ago, 12 years ago, whatever it was, because that was a way for us to discount the labor and our expense by allowing them to have a little bit of quality of life and to be able to continue being productive. So companies need to adapt. They need to be nimble. They need to be innovative. I think clearly we believe that we're going to be, on the forefront of that. It is refreshing to hear and see that you're saying that you see opportunities for yourself now, even in this world. The same with us. We've also been in touch with the SBI and certain products and services that we're going to try to facilitate. And I think that you clearly, the approach, which is why, again, I wanted to have you here, your approach of practicality, being practical and looking at things in a realistic way, in an optimistic but a realistic way, is something that is to be admired, and something that will definitely help you and your team get through this and adjust to it. Any parting thoughts? Again, I appreciate your time. You've been a wealth of insights and confidence. I'll say one thing just on a personal level. I've been telling, aside from just real health, which everybody now is taking more seriously, the well-being, and we have to really just be a healthy mind and a mindset. And I think you certainly exude that throughout whoever, whenever, and whoever you're talking with. I try to do that as well. I've been telling everybody my tricks that I've been using personally and professionally through many of the little bumps in the road of life to navigate through the challenges, to use a GPS method. My GPS method is very simple. Gratitude. I spend a lot of time in the morning just sitting there and making my list, reviewing my list, and adding to my list. And the things that many have taken for granted days ago and weeks ago, you put that on your list. I'm breathing, I'm eating, I'm walking, I'm touching, I'm tasting. One of the impacts of the coronavirus for some people is they lost sense of taste. You have to put, I've added that on my list. So that gratitude is critical. The P in GPS is prayer. You need to just spend the time, refocus, realign yourself, and say, look, the same person, to requote what you said, God got us in here. We can get us out of here in the blink of an eye. At the same time, you have to understand that the prayer is a sense of faith, that it's okay now, I will get through it, and tomorrow is going to be okay as well. Part of that P is also positivity. You need to remain practical, you need to remain optimistic, and you need to have faith in God. He will get us through this. And then the S is for strategy. You need to strategize. To sit here and say, I have gratitude, I have faith in God, and I'm praying, and life will be great, is a little short-sighted and foolish. You need to strategize personally, professionally, realign your thoughts, realign your values on everything, financial, family, emotional, quality of life, quality of well-being. And if you sit there and you strategize, you'll see you didn't need what you needed yesterday. You don't need what you think you needed tomorrow. And at the end of the day, we're not in control of this stuff anyway. So you have to re-strategize on so many aspects. Any parting thoughts from you?
So I'll give a little bit of a parting thoughts, which I think is more to, first of all, the GPS thing is great. I'm gonna steal parts of it from you.
Thank you.
I just really want to give a few food for thoughts, a few tidbits that I think that could really, that people should, when they're using your strategy as an example, and they want to really say, okay, where's the future going to be? I think they have to take a few pieces into calculation. First of all, wanted to mention before, when I brought a CTO. For a company, we never had a need for a CTO at a very, very high caliber as a mortgage company. That's not the real need. You have some IT and you move on. When my brother worked at several large companies as a CTO, and then he ended up like gig economy about a year and a half ago. So instead he's working for 1 day a week for a bunch of different companies. And I took one slot, and he was a big push to push the whole company onto Slack. We, like everyone else, using WhatsApp, text, email, and whatnot. What do we need it for? We did a major push a few months ago on Slack, put it on, and I can't even. In the last few weeks, everyone totally went on since the whole thing came about. The flow of information, and where everything is kept, and everyone knows in one place. So now, I feel we're 100 people strong, knowing exactly to the pulse of everything going on within a marketplace. It brought down the need to have the same number of conference calls. We still have them, we break it up and have them, but that flow, using a technology like that, with a communication tool for the whole company, was off the charts for us. But with that, I want to just tell people that you have to really realize that, just like people think that retail is now really going to go under now, this thing's microwave the process. As if retail was falling apart at a rate of 5% a year or 10% a year, I think we sped it up just now. I think that automations of companies and processes, The fact that the government is forced to do an SBA loan in 3 days and give out $350 billion in 3 days. The fact that the government is going to be forced to work with private practice to throw up the websites, to throw up in the testing kits. And the fact that they tested and did all these things, and the fact that every owner of every company in America had to operate his business with no one coming into the office and had to figure everything out. The companies are going to speed up automation because the biggest holdback was, I don't want to change. It's good. I don't want to try something new. Every one of us had to try Zoom for the first time. So with everything going on, you have to really realize that people are going to let people work from home. People are going to be, even if they don't work from home fully, they might come into work 2 days a week. How's it going to affect the office market? The size of the office, every office space. How is it going to affect a lot of the processes that we do? Like I tell people in my office, remember, we make money because of the inefficiencies of the market around us. In the perfect world, someone should be able to need a loan, go to some website somewhere, put in some information, 48 hours later, they should get the money in their account. Why it doesn't happen? There's 8,000 reasons. Each of us on this call, make our money for providing value on some of those points.
Totally
but
agree.
As the world becomes automated around us, that's what's going to change. And that's what's going to evolve. And you have to decide how's it going to affect our own business, our own industries, things around us. And if you listen to all these technologies, people are going to start incorporating them. That's what's going to start changing. And we have to say, how is it going to affect us and strategize? Where do you want to be, assuming your assumptions are accurate? And if your assumptions are not accurate, what happens if it's a little bit to the left? Do you have a plan for left, a plan to right a little?
Awesome.
I'm fine to stay on if you want to ask questions and stuff. I don't know how you do it from here.
Yes, definitely. So I'm gonna just stop us on live on Facebook. Then, okay. Now I will try to.
Usually for the